The next stock is ICICI Lombard, which had reported numbers earlier, early part of last week. My colleague Yash caught up with Bhargav Dasgupta, the Managing Director and Chief Financial Officer of the company, Chief Executive Officer, beg your pardon, of the company, started by asking his expectations on the growth that the company will be able to do in FY24. Listen in.
Dynamics of the industry is changing as we speak. There is a lot of regulatory changes that are being brought about, which really improves the ease of doing business, allows us to launch new products, which earlier would take a lot of time to get approval, and in a sense be a lot more agile and flexible in the products and businesses that you focus on.
Correct.
And that's a big advantage. And the only segment that we are still cautious is the motor segment. Particularly the private car segment, where we are finding that the combined ratio for the industry is roughly about 118. If you see the 9-month data, now 118 combined doesn't make it viable to ride this business. While I say that, I'm beginning to see signs of people taking some sensible calls in terms of being more disciplined about pricing. We'll have to wait to see that happen. Apart from motor, if I look at our other lines of business, health is growing faster than the market, and we believe it will continue to do so.
Okay.
Our corporate lines, across board, we've gained market leadership in most lines of business. We've been gaining market share. It's a very profitable segment of business, and we will continue to do so.
Okay.
So on balance, coming back to your question on where we see the growth and the combined ratio, we think we will grow faster than the market. We believe the market growth this year should be between 15 to 20%.
Okay.
And our combined ratio, which was about 104 last year, what we've told to the market is that over the next 2 years, we want to bring it to 102.
What is your expectation if a price increase on the TP side comes through? What it should come as in the form of numbers, which helps keep companies their head above the water?
So if you see over the years, we've seen typically the increases have been around 7 to 8%. The expectation is that maybe the roads are becoming a bit safer, so the frequency should drop gradually. We've not seen that this year, though. We've seen accident frequencies, accident aggregate numbers pretty high. But if I look at a trend line over the last 7-8 years, frequencies have come down. So if you get a 7 to 10% increase, even though inflation may be higher, I think that would be adequate to hold on to the levels of loss ratio today.
Would that be adequate to make you change your strategy towards motor approach?
We would definitely look at certain pockets.
That's ICICI Lombard for you. By the way, market